what's up, IG family? It's Thursday at 8 o'clock. You know what that means. It is Real Estate Out the Box. Another installment of at CEO Coach Mike, your favorite coach. But y'all know I'm going to be at baseball practice if it's at Thursday at 8 o'clock. But that ain't going to stop me from getting my Real Estate Out the Box on. So, this week we introduced some non-QM loan products. We introduced 2 of them. All right. On Tuesday, I was like, well, what does QM mean? I didn't know what QM meant. I know what it is now. I Googled it. It stands for qualified mortgage. So when we say non-QM mortgage, we're saying non-qualified mortgage. So what's a qualified mortgage? Qualified mortgage is like same thing as like traditional. It falls under the traditional circumstances of a loan product. So the regular stuff, right? You know, you got 2 years of tax returns, you got a job, paycheck stubs, right? Your credit. It's traditional stuff. That's QM, right? Most QM qualified mortgages are going to be sold off to the second-hand mortgage market. That's your Fannie Mae, your Freddie Mac, right? So if you go into one of these banks, you go into one of these mortgage brokers, right? You get one of these mortgage products, you go to closing and you sign that paperwork. That doesn't necessarily mean that loan is going to stay with that company that you signed, because they'll sell that loan. And most loans, when you go into closing and you sign them, most of them are sold to the secondary market. Fannie Mae, Freddie Mac, Ginnie Mae. All right? Those are qualified mortgages, QMs. They fit a particular profile. They standard. Then you got non-QM mortgage products, which is what we talked about on Tuesday from our friends at Envoy Mortgage. But, you know, they're not the only player in the game. There are other players in the game as it relates to QM mortgages. But we talked about their bank statement program, where your taxes ain't where they need to be. You ain't turned them in. You ain't filed them right. You got a whole bunch of deductions. You know how us entrepreneurs do. We don't do right sometimes. Well, you can still buy a house, and a lot of people don't realize that. You can buy a house without submitting your tax returns. There are loan products out there that will fit you, non-QM. So we talked about the bank statement program, and we talked about the 1099 income program. And what does that do? Well, say you like me, you're a contract worker, you're an entrepreneur, you're a realtor. You ain't got no W-2s. You don't have no paycheck stubs because you work for yourself. Well, there's a loan product out there for you. See, QM loans, that's what they're going to want to see. They're going to want to see W-2. They're going to want to see your paycheck stubs. That's QM. That's qualified mortgage product. Non-qualified mortgage product, you could be a 1099. All right? Now, are you going to get that 3% down, 5% down? No, you ain't going to get that for a non-QM loan. Like the one for the bank statement, 90% LTV. What does that mean? That means 10% down. That's all that means. That's what 90% LTV means. Loan to value. Loan to value, meaning they're going to loan you 90% to the value, which the value is 100%. So that means you got to put 10% in the game. On the bank statement program, you got to put 10% down. That's not including your closing costs. So you are going to have to pay closing costs. On any loan you get, you got to pay closing costs. 680 credit score. Got to have a 680 credit score. But you can get loans up to $2 million. So it ain't no, just regular itty bitty $300,000, $400,000, $500,000. $2 million you can go up to with this non-QM loan. You have an option for fixed adjustable. You got an option for 30-year fixed interest only. You got option. That's the thing about non-QM loans, is you got flexibility. You have options. 1099 loan goes up to $3 million on this one. LTV looks like 85%. So for that one, the 1099 loan, you got to put 15% down. hey, you got it, 15%. Right? They're only going to do 85% loan to value. The credit score is the same, 680. You got the same options as it relates to DTI. DTI means debt to income ratio, 50%. So what that means that your debts cannot equal no more than 50% of the amount of money that you bring in every month. That's all DT, and those are the debts that are on your credit report. Those payments can't equal more than 50%. You make $3,000 a month, your debts can't be $1,501, $1,550, $1,600, $1,700. They can't, because that's going to be a DTI that's higher than 50%. Which is cool though, because a lot of DTIs and some of these QM loans, they're like 42%, 43%. Especially the down payment resources. These DTIs, yeah, man, 42, 45%. So 50% is pretty cool. All right. So these are the ones that I want to focus on this week. Was the bank statement program, the 1099 income loan. But look, this just gives you an idea of what real estate out the box is all about. It's about showcasing the fact that there are these non-traditional products that most of you all don't know about out here in the marketplace. I have over 60 products, resources, strategies that I have access to that most people are not aware of that could help them get in a home or help them sell their home. I even have resources for landlords that a lot of people don't know about. And I'm getting more every day. All right. So every Tuesday, every Thursday, I come on here, Real Estate Out the Box. I showcase these products for you all. Put myself in a position where if you have any questions, you can come on, you can DM me, you can ask questions, we can continue the conversation. I can give you additional information about any of the things that I'm showcasing or highlighting. Or if you have any questions, it's a great platform and opportunity for us to engage. So do it. Engage with me. Every Tuesday and Thursday, clearly I'm showcasing to you that I know a lot in this business and I know what I'm talking about. And I'm saying, tap into me and use me as a resource. All right. With that being said, man, let me get back to this baseball practice. I know y'all don't be believing me when I'm saying I'm out here at baseball, but I'm literally out here at baseball practice. All right. Let me get back out here to this baseball practice. Again, connect with me. You can comment on this, share it. If you know somebody that could capitalize off the information that I'm sharing, share it with them. Go back and look at past episodes of Real Estate Out the Box. See what other resources and things that I've highlighted and talked about. Share those to people that you know that may be able to benefit from the information. With that being said, man, this is your boy at CEO Coach Mike, here to share another non-traditional tool and resource with you with Real Estate Out the Box every Tuesday and Thursday at 8 o'clock Instagram Live. Y'all have a great one. We'll talk to you soon. Happy Father's Day to my fathers. Talk to y'all later.